Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the markets analysts here at HF Markets, and I'd like to welcome everybody to another live analysis session. Today, we've actually got a live analysis session where, on a day where there's quite a lot of volatility, we've seen change in trends, we've seen certain assets reach all-time highs over the past 24 hours. So we're going to be analyzing all of this, ladies and gentlemen, and something unique as part of today's session is that we have quite a lot of data which is upcoming. We're about to get the US durable goods release, we're about to get the US gross domestic product release, and the main thing that we need to look at is also the core PCE price index. Now, we're not going to look at the core PCE price index live because it's in 2 hours from now. But there's a specific reason why we've done today's live analysis session slightly earlier, so we can prepare for that announcement. Now we're going to be looking at analyzing the market live. So we're not going to look at theories and examples from weeks ago. We're going to be looking at the market live to see what indicators are signaling, what price action is signaling, and also what the news which is about to be released, what kind of domino effect it can have on the financial trading markets. And we're going to start looking at the financial trading markets by looking at the S&P 500. Now we're going to look at the S&P 500 because we've had quite a lot of inquiries and questions and comments throughout the day in regards to the S&P 500 because yesterday it rose to an all-time high. If I just go onto a slightly larger time frame like this, everybody will be able to see that here we're on an all-time high, ladies and gentlemen. You can see the all-time high was reached here. So this is one of the reasons why a lot of people had questions in regards to the S&P 500. But if we look at a 5 minute time frame, we look at the price movement that we're seeing today so far. Number one, the price opened on a slight bearish price gap, only slight. But since then, ladies and gentlemen, we can see we've had lower highs. We can see here very clearly we have lower highs. We have very clearly as well lower lows as well. So we could see clear Elliott wave movements where we're seeing lower swing highs and lower swing lows. The only thing we need to be cautious about in regards to that, ladies and gentlemen, is if it's going to turn into more a wolf wave theory, in which case, if it's a wolf wave theory, we are going to get quite a strong correction when the US market opens. So there's specific reasons why we're looking at this because it went to an all-time high. Today is declining. It's understandable after reaching an all-time high, ladies and gentlemen, that of course people look at the all-time high and think, I'm suddenly uncomfortable buying at such a high price. So we may see a slight drop in demand. And in addition to that, a lot of shareholders think, I've been holding the S&P 500 for maybe a week, maybe a month, maybe a year. I mean, a significant amount of profit. We're at an all-time high, so let's consider cashing in or partially cashing in. So we can see it's understandable that we're seeing a slight dip. But what we need to take into consideration, though, is if we go to a 2 hour time frame, we get a more medium term look at what's happening in the market. For example, if we look at what's been happening over the past week, we can actually see, ladies and gentlemen, even though we saw that retracement that we could see on the 5 minute time frame, you can actually see, even taking that retracement into consideration, if we look at the RSI on an 18 bar period is trading is trading at a level of 60.20. So we're very clearly above the neutral. We're significantly higher than the 50 level on the RSI. And at the same time, we're nowhere near close to getting to a level which is overbought or indicating that the price is, should we say, trading significantly higher than the equilibrium price or the intrinsic value of the asset. In addition to that, if we look at here, we've got what is known as a trend indicator. Here we've got a 75 bar exponential moving average, which is basically this green line. We can see we're significantly higher than this level. If we look at the price condition indicator, here we've got a 100 bar simple moving average. Again, we can see we are traded significantly higher than that as well. Somebody says here if we can look at gold. Yes, of course we can look at gold. Somebody says what pair is this? This is the S&P 500, ladies and gentlemen. We are starting with the S&P 500, but we are going to also go and look at gold, and of course look at many currency pairs as well. Just for those individuals, because I can see some people saying about currency pairs on the chat. Something very interesting today is two pairs: the US dollar against the Japanese yen, and also the New Zealand dollar against the US dollar. Two very, very interesting currency pairs to take into consideration. Now, let's continue look at the S&P 500, because we've looked at the decline after reaching that all-time high very late yesterday. But if we're looking at this decline, ladies and gentlemen, we're at a level where we're very close to actually seeing the traditional average retracement that we have been seeing over the past week. So if we look at the retracement we've seen here, ladies and gentlemen, so a retracement of 1%. If we're looking at the retracement here again, it's a retracement of 0.70%. If we look at this retracement as well, this is 1.30%. So on average, we're looking at a retracement of 1%. So if we're going to continue to see this type of price movement, because you have to take into consideration what happens, ladies and gentlemen, where we get retracements. If we look at the law of order flow and the way that the algorithms of the stock market works and most exchanges work, is they try to drop the price when there's an imbalance in order flows. And as there's an imbalance in order flows, the idea is the price will drop in order to entice new buyers. They want to entice new buyers because if there's new buyers that match the sellers, then contracts and orders can be completed. Because of course you need a buyer and you need a seller for a transaction to actually take place. So as the price declines, and we can see, ladies and gentlemen, the price so far has declined 0.40%, we have to take into consideration that actually is the price now at a discounted level where buyers will really start to re-enter the market. This, of course, is going to be significantly dependent on what is going to be released uh, throughout today's market. Because, of course, like I said, we've got the U.S. gross domestic product, we've got as well the durable goods, and the most important thing is that we have the core PCE price index, and we're going to look at that in a moment, ladies and gentlemen. So, if we're going to look at the smallest retracement that we have seen, which is actually this retracement here, if we're going to follow that type of retracement, 0.70%, so that, ladies and gentlemen, is at this level here. So that retracement will bring us to this level here. Now, what we're doing here is price action analysis, ladies and gentlemen. Whereas if we're looking at the average retracement is 1%. So if we're look at a 1% retracement, it's, to be honest, right to that trend line. So there's a reason why we have this trend line, and you can see when we're following price action, it also falls in line with that trend line. So we are seeing a retracement so far. Yes, on the smaller time frames, the 5 minute time frame, it may look like a significant decline where maybe sellers are gaining control of the market. But we have to take into consideration as well that on the longer term time frame, there is a lot of indications that say even though the price may decline, may form a retracement, it doesn't necessarily mean that the price in the longer term is going to form a complete crash, complete bearish trend in the medium to longer term. So we have to also take that into consideration. So as the price declines, if it continues to decline, if we decline back to this region here, so between 5,978 all the way up to just below 6,000, then in that area we need to take into consideration is something they're going to push buyers to re-enter the market and take advantage of that discounted purchase price. It doesn't necessarily mean that without thinking about anything else, if we decline to that level, to automatically go and place the buy. But we need to take this level of price action into consideration. Whereas if we're going to regain momentum, ladies and gentlemen, if we go back to, let's say, a 5 minute time frame, look at this 5 minute time frame here, for example. Early this morning, we had the all-time high here in the Asian session. Now, here we can look at 65% of momentum being regained. So 65% of momentum being regained is at this level here. We can see the 0.65 there on the Fibonacci retracement levels. So if we look at the high and we compare the high and the low, because we got the high here and we got the low here, 65% momentum being regained is at this red line. So a lot of traders will use that 65%. Now, say if the price is going to increase above 65% and it's going to regain that much momentum, then that's a level where I'm starting to gain comfort and basically a buy signal potentially is materializing. Somebody again says here, which currency pair are we looking at? Guys, at the moment, we're looking at the S&P 500. We'll start looking at currencies in a moment, though. And we can see so far, even though we've seen that decline, even though we're slightly trading lower than the open price today was here. At the moment, we're trading 0.12% lower, nothing significant. Even if we're taking that into consideration, we're trading almost at the 200 bar simple moving average. We're trading in the positive side of the MACD. The bars are above the signal line. The latest crossover is an upward crossover. So it's not, we're not in a scenario where we're seeing significant conflicting signals or no signals indicating that actually we're going to regain momentum. There is a possibility that momentum is going to be regained. So we have to, of course, look at that and, of course, take that into consideration. But what can we look at to help us get an understanding of if we are indeed going to get that type of price movement? So if we're going to get a buy signal, what can we use to assist us to basically back up our signal? Because that's all based on technical analysis. If we go back to the chart here, the fact that we're saying, a retracement can go back to this level here, but then we need to potentially look at the trend regaining momentum. Looking at the fact that we're above the trend line, above the price condition line, that we're above the neutral on the RSI, looking at, for example, the 5 minute time frame, saying we got a bullish crossover, we're in the positive side of the MACD, we're above the signal line. All this is based on technical analysis. So what can we use to actually help us to back our indicator from technical analysis? Now, one thing that we can do is look at components. So this is the S&P 500. Of course, the S&P 500 is a weighted index. So basically, it means there's 500 stocks in the S&P 500. It doesn't mean they're equally impactful. What do I mean by equally impactful? It doesn't mean that they have the same influence over the overall price. For example, if we look at Apple, Nvidia, Microsoft, they hold a high weight. So a large percentage of the of the S&P 500 is made up of these three stocks. So if you look at here, let's say 7%, 6.5%, and then just over 6% here, 19%, almost 19% of the S&P 500 is made up of just three stocks. So yes, there's 500 stocks, and the reason why there's 500 stocks is because the idea of the S&P 500 is to be not invested in defensive stocks or industrial stocks, like for example the Dow Jones, not like the Russell 2000 where it's more small cap companies. It's not like the Nasdaq either, where it's mainly growth based stocks and the technology market. The idea of the S&P 500 is the overall US stock market. That's why it's got so many stocks as well. So keep that in mind. Certain stocks are more influential. Now, what a lot of traders do is they'll look at the most influential stocks, and when they've got a buy signal, they want a certain percentage of those stocks to also be increasing in value. So a lot of people may say, I will look at the top 10 most influential stocks. So basically these 10 stocks here. Now, if we look at these 10 stocks, we have 1, 2, 3, 4, 5, 6 stocks, which are increasing, which are basically green, increasing in value. three are decreasing in value. We've actually got here Meta's actually at neutral at the moment. Keep in mind when the US market is about to open, these will really start to change, and we'll see a lot of volatility. So a lot of traders will say, if I'm going to get a buy signal, I want at least 70% of the components or close to 70% to also be increasing the value to back up my signal. So should we say it's basically trying to get a lower risk of what has happened, of what the signal is. So if we've got a signal, we're trying to lower the risk of it being an inaccurate signal or a false breakout. This is what we're trying to do. Alternatively, a lot of traders for the S&P 500, they'll look at all stocks which hold 0.5% and above. So that, ladies and gentlemen, is 29 stocks. Let's get a calculator out. So for the S&P 500, people will look at 0.5% and above. Keep in mind for the Nasdaq, most traders will look at 1% weight, so 1% exposure and above. But for the S&P 500, is mainly known that traders look at 0.5% and above. If you look at 0.5% and above, that's 29 stocks. How many are in red? 1, 2, 3, 4, 5, 6, 7. So if we do 7 divided by 29, 24. So from those very influential stocks for the S&P 500, only 24 are declining. So here, it actually gives us some more leeway and backs up our signal that, yes, there is potentially a possibility that those buy signals, if it occurs, when it occurs, that indeed there is a possibility that the price can increase in value. So 76% of all stocks holding 0.5% and above are increasing in value. From the top 10 influential stocks, 60% are increasing in value. The only thing a lot of people would want to see is, the top three most influential stocks are all red. That's an issue. Okay. So that's something slightly that investors will ideally want to change. But like I said, we're about to get major news announcements. We're going to look at that in a moment. It also depends on that. That will create a lot of volatility, and it could change most of these to all be green or most of these to all be red. So the idea of what we're doing here, the live analysis, is not for me to tell you what to do, but to educate you on how you can see the signals, how you can back your signals up, and how you are able to look at different ways of determining how the price is going to move potentially over a specific period of time. So that's one thing now, of course, we do. Now, another thing that traders also look at is they're going to look at, if they're looking at the S&P 500, they're going to look at the overall stock market globally. They're going to look at risk indicators as well. They're going to definitely look at the US dollar. They're going to definitely look at interest rate predictions. And they're also going to look at US bond yields. Now, if we look at indices globally, we can see indices globally are actually mainly on the negative side so far. So we can see here S&P 500 slightly lower, Nasdaq slightly lower, the DAX is lower, the Nikkei 225 is lower, the Euro Stoxx 50 is lower as well. The only one which is performing well is the Russell 2000 and the VIX. Now the VIX here is plus 0.30%. That's not significant, 0.30% for the VIX. The VIX is quite volatile, keep that in mind. But when the US market opens and we get the news announced, people will want to see if this increases in value or decreases. Keep in mind, the VIX is declining, is known to be positive to the stock market. If it's increasing in value, it's known to be negative for the stock market because it's indicating that the risk appetite is dropping or the risk appetite is increasing. So what do I ideally want to see? Well, I ideally want to see most of these indices go into the green to start improving, because if the global stock market is performing well, there's a higher chance of US stocks also performing well. And of course, we want the VIX to also decrease in value. And also, ladies and gentlemen, something which is positive as well is that the US dollar is declining as well. That's also something which is positive and we can take into consideration. Another positive also to take into consideration is bond yields. Bond yields today, ladies and gentlemen, are 50 points lower. The lower bond yields, when bond yields are lower, is known to again be positive for the stock market. So there's a couple of things for us to look at here. The last thing I will mention is, of course, interest rate predictions. Here I'm looking at the SME group. Basically, it's the Chicago Exchange that have a Fed Watch tool, and it indicates what percentage of the market think that there's going to be a cut or if there's going to be a pause. So we can see here 66% believe there's going to be a cut. So that's the majority. So that's positive for the stock market. 33% think there's going to be a pause. After today's core PC price index, that can potentially significantly change. Potentially. But we're going to look at that as well as it's released. So, yes, ladies and gentlemen, we're looking at the S&P 500 potentially increasing in value. I mean, to be honest, already as we've been speaking now for 20 minutes. If you go back four candlesticks, one, two, three, four, when we started speaking, the S&P 500 was here, and when I started to say that there's signals here that the price can increase in value. Even as we've been speaking, I can see a lot of people here already saying that that they're following this and following this analysis on on the chats. Even as we've been speaking, the price has already increased in value 0.08% already. So if we've got scalpers, to be honest, scalpers probably are already entered the market and exited with that profit. But of course, it depends on your approach, your methodology. So we're looking at this signal here, ladies and gentlemen. But we're also going to look at how the market reacts to the news which is about to be released. How is it going to react to in terms of interest rates, which we can see here, if bond yields will continue to decline further, if the VIX, ladies and gentlemen, you can see the VIX here, which is plus zero point 0.3, for that to decline and be in the minus area. Also, global indices to perform well. And last thing, for individual components to also perform well. So I've got some questions here. So let me quickly read some of these questions and we can answer them. So I've got some questions. I'm going to go through them one by one. Somebody says, the buy signal, is it guaranteed or is it dependent also on what's about to be released? It is definitely dependent on what's about to be released because based on what the news is going to be released, it could very quickly switch the indicators and going from a lot of buy indicators to suddenly an indication that, indeed, there's a high possibility that we're going to get the retracement like we saw here and here as well. And the price is actually going to retrace back to this region here, which we saw on price action. Another question, is there also a possibility for decline? Yes, of course. Guys, keep in mind, indicators, they are very helpful. Fundamental analysis, like we were looking at the VIX bond yields, looking at the US dollar, looking at individual components, the global sentiment towards the stock market, that helps. It can really help us determine how the price is going to move. But we always need to be prepared for an alternative. And this is why I also said, keep in mind, if we're going to get a different type of price movement, and people can look at, for example, a breakout of this level here. So if it breaks below here, or people can use the Fibonacci again to try and see where 65% momentum being regained is. So for example, if we draw Fibonacci here, 65%, so at this level here. So if the price declines below this red line, people can look at that instead of the breakout. Depends on you and your approach. Then, we pointed out between this region here is something that we have seen in the past. Of course, past performance isn't always, a guarantee or always the best indicator for future price movements, but of course, it's something we can use and evaluate. And I've got another question here. Okay, great question. We're going to look at this now, actually, because somebody here says, what news will actually switch it onto its head? And let me just make sure I'm reading it correct. Yes. So somebody says, what news can be released which will actually turn a potential buy signal into a definite sell signal? So let's go to HFM's calendar. Keep in mind with HFM, we give a lot of things available for traders for free. You have an economic calendar available for free. You also have free webinars, continuous live analysis. We also have live trading sessions, live analysis sessions. We have daily articles. We have copy trading, which is available as well. There's a lot that we provide. One of the things, like I said, is an economic calendar. So let's go to the US for today. Let's look at filtering this. Here we go. Let's actually look at filter, so it's only for today. There we go. Here we go. So it's only for today. So there's a couple of things for us to look at here. The main things for us to look at is the gross domestic product. So the US gross domestic product. What's an easy way of understanding the gross domestic product? It's one of the indicators which is used to understand if the economy is growing or if it's contracting. Is the economy growing smaller? Is the economy doing better? So of course, the higher, the better it is definitely for the US dollar. Sometimes it can also be better for the stock market. The reason why I say sometimes it can be better is because if it's lower, it may actually prompt the Federal Reserve to more, certain that there be more certainty that they will cut interest rates. So that's the first thing. The next thing is these two things here, ladies and gentlemen. The core PC price index. This is actually one of the favored tool of the Federal Reserve. A lot of people think the main thing they look at is inflation. Definitely, inflation is up there 100% with the PPI, with also the NFP results as well. One of the main things, though, which a lot of people don't know, is the core PC price index. It's basically looking at not inflation of a basket which never changes, but inflation of what actually people are buying. Because if we look at, for example, if the economy is doing well, a lot of people may be buying steak. So it's understandable that it's part of the inflation basket. But if we're in a recession, not a lot of people are going to be buying steak. But inflation will still take it into consideration. Whereas the core PC price index, it only looks at what people are buying. So as part of the inflation basket, which is measured every month, there may be some things there that not a lot of people buy. For example, tobacco is part of the inflation basket. Maybe not a lot of people are buying tobacco in America. It won't be included if they're not buying. It won't be included in the core PC price index. That's why a lot of people look at the core PC price index, especially economists and bankers in the Federal Reserve. Now, it's expected to come in quite high again. It's expected to come in 0.3%. It came in last month 0.3%. If it's going to come in 0.3% again for a second time, that's quite a big issue, ladies and gentlemen. It also will bring the yearly price index up from 2.7 to 2.8. Normally, ideally, the Federal Reserve actually want the core PCE price index to be 0.1%, also 0.3%. That is ideally where they would like it to be. So I'm going to look at two things. Number one, what would be ideal for the stock market and could actually have a negative effect on the US dollar? And what would be positive? Positive for the US dollar, but can pressure the stock market. So let's look at these two scenarios, and we're about to get them released. Uh, I'm too late. So they just now have been released. So if we look at the producer price index, if we look at the gross domestic product, I was gonna say if it comes in higher than expected, it could have a negative effect on the stock market because it could put less pressure on the Federal Reserve to cut. If it comes in lower, but only slightly lower, because there's a very clear silver lining. If it comes in slightly lower, then people don't fear economic slowdown, a harsh landing, potential recession. But at the same time, it does put that little bit of pressure on the Federal Reserve to say, guys, you're regulating inflation, you're regulating the banking sector and the economy, of course. We need some support here. But it actually came in line as well. If we look at the core PC price index, which is going to be released though in an hour and a half, if we look at this, if it's higher than expected, it's definitely negative for the stock market. If it's, this is if we're following economics, doesn't mean the market's going to act on that. The volatility may be something slightly different. If it comes in as expected, again, is something that potentially can be negative for the stock market. If this comes in lower, especially if it comes in significantly lower, like 0.1%, that could be significantly positive for the stock market. So let's go to the S&P 500. S&P 500's gone even higher. This is, if we go back again, we started speaking about this in about a buy, 30 minutes ago. So the price was here, ladies and gentlemen. So if we look at how we've done so far, we're up 0.15% just in the past 25, 30 minutes that we've been speaking about the S&P 500. This is why, ladies and gentlemen, we do these live analysis sessions, because they can be extremely, extremely helpful. Let's go back to our technical analysis, fundamental analysis as well. Let's go back to the components, which may take, of course, these may take some time to react because the US market hasn't yet been opened, but we can see the greens have slightly become stronger increases. For example, the Meta was at 0%, so neither decline, neither an increase. We're now looking at a slight increase. We can see the decreases here as well are weaker decreases. So you can see the slight improvement here. If we look at that, the VIX, look at the VIX now, ladies and gentlemen. This is what I was referring to before. The VIX has gone from plus 0.30 to minus 0.03. If we look at bond yields are unchanged. If we look at the CME FedWatch tool, again, this is unchanged as well. But keep in mind, this will definitely change when the US market opens. This will definitely change when the US market opens as well. So we, of course, are going to look at that, keep on looking at that, take it into consideration. So far we can see, this trade that we've been looking at has been performing, quite well. The only thing that we need to take into consideration, like I mentioned at the very, very beginning, is that, we're not going to find resistance along, that trend line, that level where we're seeing we're seeing lower highs, we're also seeing lower lows as well, because that still is possible. We're still on a slight lower low here, so we can still see that slight tilt downwards. But that's going to depend on the core PCE price index. Like I said, if it comes in at 0.03, if it comes in at 0.04, can really pressure the stock market. If it comes in lower than that, that's definitely something that investors potentially may pounce on. So, like I promised, I've got another question as well. So somebody here says another thing: when news comes out, how long does it take for the market to take shape and current news? Uh, what I will say, ladies and gentlemen, is if when the news has come out, if there's a lot of volatility, a very sharp spike, a lot of the time, I won't say a percent, like 90%, 95%, I won't say a percent, but a lot of the time it tends to correct. Okay, keep that in mind, because what it does is it starts to trigger pending orders. And also keep in mind, large institutions, they prefer to buy based on the speculation, based on the rumor, and sell the news release itself. So keep that in mind. In regards to how long it takes to take shape, the theory is, ladies and gentlemen, is that it takes 30 minutes. But what a lot of traders do, because after 30 minutes you may miss a lot of that momentum, uh, is a lot of people will look at scaling in. So, for example, ladies and gentlemen, if we go to a 1 minute time frame, let's say news was released at, it was released at 3:30. So news was released here. People may look at scaling in. They'll say if it crosses above here, I'll open a buy, but then I'll open a second buy here, and then I'll open a third buy up here. So instead of opening one large trade, they'll look to open not higher volume. They'll reduce the volume, but they will trade more trades at different prices at different times. So instead of opening three lots at this entry point here, they'll instead open one lot here, then one lot here, then one lot here. This is known as scaling in. What traders also may do is scale out as well. So keep that in mind. Now, we're going to go on to looking at gold, and then we'll start looking at currency pairs as well. So gold is something which did take a hit. It took a hit for a specific reason. Of course, it took a hit, number one, because there was a ceasefire agreement in the Middle East. Of course, there's certain terms and conditions which makes that ceasefire quite shaky. But also the strengthening of the US dollar that we saw last week really made gold less attractive. Also, speculation, which kept going up and down in regards to interest rates, also pressured the price of gold as well. Also, keep in mind, guys, the price of gold is significantly high. So the fact that it's significantly high, uh, a lot of the time it can trigger sellers to very quickly just sell and cash in very quickly. So, for example, we saw 5 days of increase in the value, and then 3 days it just wiped off. Sorry, one day just wiped off 3 days of gains. So you can see from here in one day we went from up here all the way to down here, so almost wiping off 4 days of gains. But it's actually 3 days. But, ladies and gentlemen, we can see we're regaining control. We're definitely regaining control. We're still at a discounted price. A lot of people, they're scared of buying, at this level. They're scared of buying at this level, and they're scared of buying at this level. That's understandable. I don't want to say people, not to follow your instincts and not to follow what is known as market sentiment and psychological pricing, because that does uh, exist within the market 100%. So it's not about resistant levels. It's not about a line and everybody thinking if it hits this line it will decline. It's not art, where we're trying to color in and keep within the lines. It's not like that. But there is such a thing as investor psychology. When the price hits a certain level, people start to think, is it overbought? Is it trading above its intrinsic value? Is it trading above the equilibrium price? So somebody says, what pair are we looking at now? This is gold. This is gold against the US dollar. So, yes, that's understandable. People get cautious at that level. We're not at that level. We're just above the trend line here now, ladies and gentlemen. So, we're above the trend line, just about. We're above the price sentiment line. We're also above the neutral on the 50, on the RSI as well. So, here again, we've got a slight bias potentially towards bullish price movement. If we switch to we're on a 1 minute time frame now, so let's keep to a 1 minute time frame. If we're looking at a 1 minute time frame, we're slightly above the 200, we're slightly above the MACD as well. We've got a bullish crossover, but we're seeing bearish candlesticks at the moment, so we don't want to be traded on bearish candlesticks. Uh, Unless you've got a specific reason to do so. So what a lot of people will do is they'll wait for momentum to be regained. So, for example, here we can see if we can cross above here and cross above here, maybe momentum will be regained. Alternatively, what people can do if they're slightly cautious about finding resistance at that level, is they can either not look at that as an entry point, but look at the actual breakout as an entry point. Alternatively, instead of opening one larger trade at one of these entries, keep in mind the difference between these two entries isn't large, it's 0.08%. Of course, that can be significant, especially for ultra short term traders. What they can do, instead of, for example, opening one lot at one of these, they can open half a lot here and then half a lot there. That's scaling in. And what they can do is also scale out. So this trade they'll exit at this red line. This trade they'll exit, for example, at slightly higher exit point. So that's also known as scaling out. So people can look at that, regaining momentum, but entering at two different prices, two different times as well. So traders can definitely look at that as well. So that's in regards to gold. In regards to how the core PCE price index will affect gold, if it's going to trigger a weaker dollar, and increase the possibilities of the Federal Reserve uh, cutting interest rates, that's something positive for the price of gold. If it's not, then it can trigger a decline for the short term. Of course, for the longer term, there's still a lot of factors like geopolitical tensions, the rise in retail demand for gold, and also certain countries looking to mitigate against the dollar, avoid assets being frozen and trying to go into something more tangible. Countries that are doing that include Russia for obvious reasons, China for obvious reasons, Turkey for obvious reasons as well, but also Iran, India, and quite a lot of countries. So if it's going to trigger a decline, keep in mind it could be a temporary decline, potentially. Nobody knows because, of course, tomorrow there may be peace, there may be another ceasefire, there may be a completely different market. But even if it declines because of the core PCE price index, currently there is still aspects and elements of the market which say later on traders may look to enter at that discounted purchase price. Otherwise, ladies and gentlemen, if we get a lower core PCE price index, that would trigger a lower dollar potentially. That would trigger investors starting to believe that actually the Federal Reserve may not be pressured to cut interest rates, or they will cut interest rates in December, which most economists do believe they'll cut in December, but thereafter they will not take into consideration interest rate cuts for a prolonged period. So, for example, it could be for a quarter, it could be for two, 3 quarters, even potentially. So that's in regards to gold, and we're about to now have that breakout that we spoke of. We're not quite at the break. We're not quite breaking above, but we're close to it. So that's again something people can keep an eye on. Also, let's look at a 5 minute time frame. If we look at the 5 minute time frame, if we do get that breakout, it will follow the trend that we have been seeing throughout the day. So I've got some more questions, but we'll look at those in a minute. Let's go back to S&P 500 just to check up on it. Guys, still increasing in value. So we spoke about that 40 minutes ago and said that it's increasing, the potential of it increasing in value, still increasing in value. Uh, let's look at gold again. Gold, another bullish candlestick here, still working its way up. The next thing I wanted to speak about is currency pairs. Something very, very interesting, like I said, is the New Zealand dollar against the US dollar. Yes, New Zealand dollar, US dollar. Let's find it. There we go. Let's get it onto our 2 hour time frame. The New Zealand dollar is actually the best performing currency of the day after the Japanese yen. In the Asian and European session, it was actually the best performing. Now it's only second to the Japanese yen. But, ladies and gentlemen, what we need to take into consideration is that the Reserve Bank of New Zealand just cut interest rates. So even though the market has pounced on that and the New Zealand dollar hasn't declined, if the core PC price index is higher than expected, which is positive for the S&P, sorry, positive for the US dollar, we are able to enter and speculate at a much higher price. Because it's like saying, if you want to speculate a decline, would you rather speculate down here, where it's at a low price, or speculate a decline here at a high price? It's like saying, would you rather sell when you're low, or would you rather sell when you're high? Of course, everybody wants to sell at as high price as possible. So if we are going to get news which is going to trigger a stronger dollar, there is potential there with the New Zealand dollar. But also, what we can take into consideration is what is the worst performing currency of the day, other than the US dollar, because we can look at either US dollar regaining control, increasing in value because of the core PC price index, in which case we can number one look at the New Zealand dollar because there was a strong interest rate cut today, and look at that as a rebound and a correction. So investors taking advantage of the better entry point. Alternatively, we can look at we want to speculate the US dollar is going to increase in value. What's the worst performing currency so far today? Worst performing currency so far today, we can see here, is the Canadian dollar. The Canadian dollar. So also for us, we can take into consideration the USD CAD. This is also something we can take into consideration. So this is the USD CAD. So we did see that the US dollar is declining here, but either way, we're still seeing sharp increases here. So we can see why there's some weakness here with the US dollar against the Canadian dollar. Sorry, strength here with the US dollar against Canadian dollar. And also keep in mind, as it's retracing here, we're getting back to that trend line where potentially may rebound off that trend line, and we're going back to that neutral level. So it's not, we're going to a level where potentially the price is going to form that next swing accordingly. So that's again something that we can take into consideration. But if we're going to see a low core PCE price index, and like I said, the core PCE price index that can really support the S&P 500, the stock market, really support gold as well. But it can trigger a weaker US dollar. And if it's going to trigger a weaker US dollar, then what's advantageous? Definitely to take into consideration the Japanese yen. And, you know, we can see why. And one of the very first things I said 45 minutes ago, because some people were looking at currencies, I said to everybody, two things to look at, which are very interesting: USD JPY, and also the New Zealand dollar against the US dollar. This is live on YouTube, guys, so you can, rewind and you can see, as I said it 45 minutes ago. And guys, you can see why. As I've been speaking for 45 minutes, we are seeing that strong decline continuing. But guys, uh, we've been speaking now for 45 minutes. We've really looked at some strong signals, especially we spent a lot of time on the S&P 500. And that's, based on the analysis that we're looking at, that's been moving marvelously. But there's other things that we have mentioned. And it's all dependent at the moment on the core PCE price index, especially if the core PCE price index doesn't come in at zero point 0.3. If it comes in at zero point 0.4 or 0.2, 0.1, so something different to what analysts are expecting, then that's really something that we can get a lot of volatility on. So that's it for today. Let me just make sure there's no other questions. Can we go through can we all analyze one trade, then take us through the process of getting confirmation and when to enter? Guys, that's what we did with the S&P 500. Like I said, I'm not here to give investment advice of saying this price, this time, this is where you need to enter. But what I've done is I've taken you through the process of how you can take into consideration what to do in order to determine how the price potentially is going to move. Um, Let me just make sure if let's see if there's any other questions. No, I can't see any other questions. So let's call it a day for today. Thank you for joining. Hopefully, it was educational and informative. Of course, trade responsibly, trade safely. Don't forget, here at HFM Markets, HF Markets, keep in mind that we have copy trading, where you can see how other traders are trading. You can follow other traders. Sometimes there's a trader which has a very large account, a lot of experience. Potentially that's something, of course, you need to check. So there's benefits there. But also we have webinars for free every single week throughout the week. We have live trading sessions. We also have live analysis sessions like this as well. And we have every single day articles which analyze the market, confirm the latest news, what's driving the market, latest indications, and so on and so forth. So that's it for today. Let's see what's about to happen with the core PC price index and see how the market reacts. In the meantime, though, goodbye, take care, and we'll speak on our next either live trading session, live analysis session, or also on our